What's going on, everyone? Welcome back to the Modern Mortgage Show, where I interview mortgage professionals who share their stories and modern information about the industry. I'm your host, Rocco, and our guest to start the week is John Preston, and he's a loan officer at Land Home Financial Services out of Scottsdale, Arizona. John, welcome to the show.
Rocco, pleased to be here.
Thank you so much for coming on. Now, we did have a little technical difficulties before we started, but hopefully we can get through this smoothly.
Yeah, too many people streaming on Netflix and Amazon, I guess. I have no idea. Internet's interesting.
So John, let's start the show. Can you please tell us just a little bit about yourself? Maybe give us a brief intro of who you are.
Well, I'm a loan officer in Arizona. Actually began my career in Southern California. About the time I started, interest rates went from the mid to high eights, which was considered good back then, to the high teens and low 20s over time. So I've seen that. When I first got into business, interest rates were regulated by the government, and what changed was the discount cost. So it kind of gives you an idea where I came from when I first got into the business. I've been through the savings and loan crisis. I worked for a savings and loan for years. At that point, I was a branch manager, a producer, had underwriting authority, helped with product development. I got to help invent the first generation of adjustable loans, which I guess you'd say. In the 90s, then we had the S&L crisis. And that dislocation, at that point, I became a licensed appraiser. And I will tell everyone out there who's in the industry that of all the licenses, I've been licensed in real estate in California a couple of times. I've been licensed in Arizona as a broker and as a realtor. The appraisal license is by far the hardest license to get in our industry. And so I was quite proud of getting that. Used it in California, but when I came to Arizona, I let it lapse. And I got it in case I stayed in management in S&L, in the S&L industry, which I didn't. Was a broker here for about a dozen years, late 90s to 2007, 2008 actually is when I closed down. And then
May have some technical difficulties here. We had this when we were about to start the show. We'll give John a second to stop. Let's see.
that's kind of my background. So what I've got is some experience that predates a lot of our problems today. But yeah, and that's my background. I mean, I'm an originator. I have a passion for what I do. I think I've got some understanding about. I have the Rocco.
Yep. Are you there?
Yeah, I see you.
Yeah, I think we're lagging a bit.
Yeah,
I think we're back, right?
I think so. At least I am. I'm seeing me move. So.
All right, perfect. So, how long have you been in the industry for?
Well, over 35 years.
Awesome. So, did you go straight? Were you straight into the industry, or did you do any type of work before you got into the mortgage industry?
Well, after college, I went out to California, and I was working in a retail management training program in a retail store. And one of my work partners, his brother was working for a private money lender in Southern California at that time, a large one. And he went to work for another version of that company, and he brought me with him. So my first introduction to lending was through, what we would call alt or subprime lending in today's world. It was private lending. One of my clients that I just met was a mortgage banking company. They were out of San Diego, opened a branch in Orange County, and they hit on me successfully, and I joined them. So that was and at that time I was doing FHA, VA loans. As I said, it was a regulated market where the government set the rates. The agencies, we submitted our loans to agency. We didn't have direct endorsement underwriting at that time. Ironically, many of the standards that we had then are a bit relaxed, but nothing's really changed a lot in FHA, VA, in the basic world of how you approach the loans. Became an agent for a savings and loan. Radically different. My customers now were quite wealthy. This was a savings loan that specialized in high balance lending, jumbos, if you would, or super jumbos. So that was kind of my first 6-8 years in the business. 10 years in the business were spent doing that kind of lending. So basically, yeah. But I got into it, and I kind of by accident in a way.
Yeah.
And stayed there ever since. I will share my first story because some of the videos I've seen of yours, they talk about training. My first day in the marketplace with my new boss at Sunset Mortgage years ago, I got there at 8 o'clock. He said, here's some business cards, cross my name off. I've ordered you some cards. Go to Santa Ana, California. Points are 3.5. I'll see you at 5 o'clock. And I said, what are points? He says, don't worry, it's a good quote. Come back at 5 and we'll talk about it. And that's how my first 30 days went. It was pretty much go out, talk to people, and bring back your questions. And about 30 days into it, the light went off. Okay, this is how it works. This is what I'm actually doing. It began making sense, and then I couldn't sleep for about 3 months. So I told the story, but that's honest to God truth. That was my first day.
That's hilarious. So you learned from experience. You're forced.
Well, you go out and have a conversation with people. And back then it was a little easier to have conversations, especially in today's world. But you go out and have a conversation, they ask you questions. And of course, I didn't know the answers. So I would go back and we would diagram them, talk about them, role play through them. And you begin putting together a how to talk, how to understand, how to communicate. And you understand that it's not about numbers. Our business is about relationships. It's about being able to frame a conversation, help someone understand who does this once every 5 or 10 years. If I'm lucky, I get to do this 3 or 4 times a day, have these conversations. So over time, you get real good at the conversation part.
Yeah.
But you still have to go back and remember the person I'm talking to very rarely has these conversations because it's not part of my daily life like it is mine, like it is in my industry. Yeah, but that's how I got into it. It was kind of by referral, and then I just kind of got.
John, we're back.
I can see you. You're like digitized into some kind of alien right now.
We lagged for like 5 seconds there. I think we're good now.
Yeah.
Okay. So we're obviously in a very weird situation right now in the world. So what are you doing to get through this disruption and, uncertain period of time?
Well, part of it is, I'm having to work differently. As I said, I learned the business at a time when you could see people and we didn't have the digital resources we have today. So I'm partly learning to use video, partly learning to use some of the other tools we have available. And I read faster than I can listen to a video. So video is something I'm struggling with because I don't do them. I don't enjoy them, but I'm doing them because it's how we communicate today. And in today's special world of the coronavirus issue, it's pretty much all I've got. I've got to be able to share things. Now, company-wide, we're a lender. We do FHA, VA, and USDA and conventional loans, and we do some other stuff that's not as easy right now as some of the non-prime, non-QM, some of the more unique loans. But in between there, a while back, Land Home partnered with a company called Trio. Now, Trio is a kind of a third option. That's why they use the name Trio. In our world of real estate and home ownership and where you live and how you raise your family, you can either rent or you own. That was kind of the 2 options people had. Well, Trio, it gives a third option because it's kind of like a hybrid where we're going to set the terms of a situation today for someone to move into a house. And the client actually gets to pick out the house like they were buying it, but it's set up as a long 2 to 3 year lease process where everything is written up front. They know what they can purchase. They know how the terms are going to work out. They know what they're going to do. but they may have some issues to work through, whether it's the uncertainty right now, whether they're working on some credit things or some other things that they have to get through, but they fit this program parameters, which are pretty broad. Then it becomes a third option for people who it lets them make a decision over time. So they've got 2 to 3 years to kind of work through the process to get themselves positioned, but also become comfortable with owning a home. So it's a little less intense, but it's an option. And we're the underlying, when I say we, Land Home is the underlying financial and for the country. And it's probably available in 13 to 15 states. It's not available nationwide yet. They're rolling it up. It's a 20-year-old process. It's not a new company. This is a new thing that's been out there for a while, but it's new to us in terms of the last year or so. But it gives people a choice, and it lets us work with people. Land Home did a study. We found out that over half the people we had talked to that we couldn't help with a loan, we could maybe fit into this program. Wow. So it becomes a plan B, maybe.
Yeah.
And it works for sellers. It works because now you've got a buyer who's not a buyer but can still make an offer, and you can sell your house and move on. For a realtor, they get paid their commission up front. Mm-hmm. And the buyer's got a partner with them for up to 2-3 years between Trio and Land Home, who are there to help them and work with them over this period of time to move them into that final step.
Wow, that's definitely an interesting program you guys got, and an option that really is. So
I appreciate you asking, because it's something to me that provides you unique benefit.
John.
I'm here.
All right, great. So shifting gears, what would you say when you first, got into the industry? You said 35 years ago.
Yes.
So when, other than your, you just getting sent out and getting told to come back at 5 o'clock with your questions, what were your other big struggles or obstacles that you had faced early on?
Well, yeah, part of it is in the era when I began, we didn't have access to information quickly. So when I took an application and pulled credit, it was 2 or 3 days minimum before I got the report back. The appraisal process was done through the agency, so that could be anywhere from a 4 to 6 week process. Now, timelines weren't 30 days. If you could close an FHA loan in 60 days, when I first got in the industry, you were a god to the marketplace and be consistent. So part of it was we just didn't have access to technology. The biggest struggle, we had 2 programs. I did FHA and I did VA. We didn't have a lot of other options at my company. So I only had to learn 2 programs. Conversely, in today's world, and I don't know, I've looked at Land Home's menu. We might have, in variations, we could have hundreds of variations of programs. So I didn't have to struggle with learning programs. I had to struggle with meeting people. And we did, and it was more or less, I spent 90% of my time in realtor offices trying to talk to them about situations, answer their questions, do their pre-quals. But when I did a pre-qualification for someone, I had to do it sometimes I didn't have access to computer or automated underwriting. So I had to be right. I had to be 99% accurate with a pre-qual when I said to write this guy a contract because of the interview. So I became good at interviewing and trying to pick up on the areas that might be an issue, so I could let the agent know when he wrote the contract. But I had to do it pretty much on the back of an envelope or a blank piece of paper. I had to say, we can get this thing done, and then make it work at the other end. So it was a little different environment. When I first got my first HP 12C, I thought I died and gone to heaven, because now I could do payments without having to carry an amortization book with me or factors. So we didn't have technology to support us when I first got in the business.
Yeah, so definitely technology has really made its impact into the industry since you got into it. So since technology has made its way into the industry, how has this affected you and your business?
Well, when I was a broker, and I fought desktop underwriter and LP, the automated systems, for a while. I had some contacts within the mortgage insurance industry, and I say, can I trust this stuff? I went to all the seminars that Fannie and Freddie would put out there about why we should use LP and DU. This is in the late 90s. And I'm going, but once I understood that LP and DU, I was a one-man business, but I had the same underwriting parameters theoretically that any large mortgage company or any large bank did. And it kind of, in that sense, it flattened the advantage. And I also began to understand how you could use the systems by changing borrower profiles. So I got pretty good at getting my approvals through the system, understanding how they worked and how I could counsel my clients. So I became very tech savvy and very much I embraced automated because it became my best tool against people who weren't spending time to learn the tool.
Yeah, so you adapted to the new technology.
I think that's kind of one of those, you adapt and survive, or you don't and you perish. I mean, and we're in that right now. We're in this. Yeah. We are. What hasn't changed in all my years in lending, Rocco, is that everything is subject to change, and usually without notice.
Mm-hmm.
Rates, markets, in this case, a virus. Things can impact, and you just can't see them, and you have to deal with them as they come along.
Absolutely. So you're a loan officer. You work with home buyers. Let's go to the buyer side now. What do you see as the biggest misconception that your clients have before working with you in regards to getting a loan?
Well, I think part of the misconception goes into what it takes to be a buyer. I mean, you got people that are prospects, and the questions I get typically, once I get into the conversation about the credit, the income, and the assets to close, and typically we only need two of the three. If I've got two of those three things, then I can make the third one work some way usually. Now, I worked for a company a while back that ran a lot of rent to own. They're trying to get mining renters who wanted to maybe buy houses. And what we found out is that people who are wanting to rent right now, and maybe with the possibility of owning, about a third of them could buy today. So there's a large part of the people who
John, you there?
are misconceptions that have and waiting for them to.
All right, looks like we lost John. Let's see if he joins back. We'll give it a second. Well, it looks like we lost John. If you're watching this, I really want to thank you for coming on the show today. I know we had some technical difficulties. Oh, you might be back. John, you there?
Um, I think we're back.
I think you're lagging. Let's see if this.
Life's too exciting right now.
It's definitely strange times.
I apologize
Okay.
for that. Anyway, we're back, I think. Let's do this.
Wait, wave to the camera. Let's see if this is live.
Oh,
John.
I'm here.
Okay, perfect. All right. So let's just get another question in, and then we can end it. So hopefully this uploads. All right. So last question. What is the number one asked question that you receive from first-time homebuyers?
How do I qualify? Basically, how do I qualify? Can I get a no money down program? Do I have down payment assistance? What does it take? I mean, they have. There is no one question. I think in many ways, they've seen a lot of the internet. They've heard about it from friends. As I try to explain to customers, if the more favors you ask of the industry, it changes pricing, it changes situations. If you've got a down payment and you've got good credit, then you've got more options as a customer.
Mm-hmm.
The minute you ask the seller to pay for closing costs, you lose a little bit of your leverage. When you ask the lender for no down payment or closing costs or something. So I kind of guide them through the process. The options are different depending on what your situation is. If you put together a down payment, then you've got different options than someone who hasn't. Now, whether you use the money, I'm not sure. We'll have to figure out what is best for the customer, but they have to understand that if they come in and say, I haven't saved money and my credit is not well, what do I have to do next? And then they go into a credit repair situation. We don't repair credit, but I'll say if you do three things, there's a chance your scores will jump in the next 3 to 6 months and we can put you back in the system. Majority of them do it. Some just don't care. They won't do it because they have to actually do some things. So part of it is getting themselves positioned to be a buyer. And I think a lot of them don't fully understand what they have to do that. They don't have to have 20% down. They don't have to have perfect credit, but they have to do some certain things that once they get into the minimum standards of our industry, then they're in the game. Now they have to make decisions. Do I do it now or do I wait longer? Waiting usually is not a good plan in anything in life. But because the situations can change. So I wish it was one single question. I think part of it is just wanting to know how they do it. And if they can't do it today, when can they do it?
Mm-hmm. And that definitely.
As I said, I may have lost you. I've had people I've been talking to for over a year. I had one gentleman I talked to and met him a year ago at Thanksgiving time. In July, he was homeless. In December, he had a brand new house.
Wow.
So he went through everything. He was a veteran and whatnot, a disabled vet, but it was quite a story. I was quite proud of him for what we were able to help him and keep him in the game because at one point he was going to quit.
And that
because he was
comes
homeless.
back to having an experienced loan officer who's definitely knowledgeable and that can educate the buyer because they are first-time buyers and they don't know the process.
Like I told you earlier, I try to do this 3 to 5 times a day. If I can have 3 to 5 conversations a day with the borrower about meaningful situations, then that's what I do. But the client does this every 5 or 10 years, if that.
Mm-hmm.
So we better. It's a great. There's passion involved as well as knowledge and energy. But you have to care. You have to care. And when I leave a customer after closing, they're usually in a better position than they were before I met them.
Yep, and that's definitely what you want to leave a good impression on people.
Well, you help them through their life. I mean, you help them along. I mean, you do help people. it sounds silly, but when I was doing loans for wealthy folks, it was funny. They needed help too. They had situations to work through. They had challenges, and part of it was understanding. And their world was different than my world or most of my clients' worlds. But our bank, so it isn't just people, first-time buyers who need help. There are some people at different economic strata that still need, because they don't do it every day. That's not their job. Their job is something else. When they come to a professional, our job is to give them the advice that's right and timely and meaningful to them.
100% agree with that. Well, John, I really want to thank you so much for coming on the show today. I know we had some technical difficulties, but I think we did our best to work through it. I had an amazing time talking with you, and I really appreciate your time.
Rocco, same here. Appreciate the opportunity. Challenges are what they are today. That's today, I guess. I don't know.
And thank you to all the viewers for watching, and we'll see you again next episode.